Thank you. Thank you, Mara. Yes, this is perfect. Um, Thank you so much. I'm Cass Iku, and I'm really honored to be here today. I'm a volunteer with the Houston Freedmen's Town Conservancy. I'm their advisory board chair. And what's really special about Houston Freedmen's Town is that it's actually located right here in Houston. It is the one of the last fully intact freedom colonies post-emancipation that still exists in America, and we have it right here in our backyard in Fourth Ward, Houston, sometimes known as Freedmen's Town, as Midtown. Now, what we do as a preservation group are trying to restore the buildings and also secure the future of the families that still reside there. It is not a relic or a museum, it's a living community that we're all invested in. So for today, we really wanted to focus on talking about how we fund our businesses, our communities, and the different pathways we have to doing that. So I'm really excited to introduce you to three very special, super knowledgeable people that we can learn a lot from. Miss Sherry Lawal Price of Unity Bank. Give it up for her, please. Thank you. Philip Yates with Equiliberty. And Miss Jill Johnson joining us all the way from New Jersey with the Institute of Entrepreneurial Leadership. So before we get started, I want to kind of just do like a little ground setting just about what is so special about the US space. And I will say that Freedmen's Town, we have adopted the US space as one of our own. So the initial footprint of Houston Freedmen's Town was actually much larger, even so we have a number of buildings intact. Believe it or not, this part of downtown was a part of historic Freedmen's Town. And this building that you're in was part of Freedmen's Town. So absolutely, Esperson Building, a space is part of that legacy. But more importantly, this intentional business development and community that Legina and the TUS space have built is a continuation of what Black communities, founders, entrepreneurs, those trying to build self-determination through business and their society started. So I just wanted to kind of give a special shout out to TUS Space for that. And this is it, keeping it going forward. Okay. So, of course, with the Freedmen's Town Conservancy, we all end up being history nerds. And as I was preparing for this, I couldn't help but doing a lot of deep research around where our funding models began early on. So just a little kind of background context. We're going to go a little bit back to really the origins of modern banking that we see now. And a lot of this started during Civil War, particularly for those of us as Black Americans. So post-emancipation, as individuals were coming out of Galveston, out of Juneteenth, where it all happened here, of course, they are now trying to build self-determination. And in order to build their homes and their businesses, they needed banking. One of the things that was initially set up in 1865 was the Freedmen's Savings Bank. Now, this was set up by an act of Congress, but because of, the powers that be and just that lack of investment in the community, it did not last more than a few years. Not because Black, business owners were not interested. It actually grew rapidly, opening, branches all over the country. At one point, there were over 135 Black-owned banks, but because of just acts of Congress and, lack of investment, it ended up closing. What an interesting connection here is that one of our great abolitionists, Frederick Douglass, at one time had stepped in to take over the bank and try to save it. But even though that early start was challenging, like most stories coming out of emancipation, that spark was still set for Black communities about the need for financial self-determination. And so between 1888 and 1934, communities across the country opened up over 130 different Black banks. So my question is for you, Sherry, with Unity Bank, if you can kind of tell us a little bit more about your role in your bank and how you all are continuing and helping to revive that legacy that we once had.
So is it still morning or afternoon? It's morning. It's morning somewhere. So good morning. I'm Sharila Wall-Price, Senior Vice President and CRA Officer at Unity National Bank. I've been at Unity for a little over 17 years. I actually began my career there as an underwriter and then just kind of worked my way um, through the levels. And I left for a little bit to go to a larger institution to do or focus on small business banking, especially in underserved and underserved communities. And then in 2020, during the pandemic, I did see a lot of things that went on internally, not just at the institution I was at, but a lot of big banks, PPP, idle. And there were individuals, corporations getting funds that really shouldn't have. It really should have been allocated to small businesses. So at that time, I thought it was best for me to take my talents and go back to Unity National Bank, where we really believe in serving the community. Unity has been around since 1963. It was originally Riverside National Bank in Third Ward. And so that was the second African-American owned bank, and it's still the only African-American owned bank and led institution in the state of Texas.
Fantastic. So when we when we look back on just like past history that the Black community has had with banking and financial services, even though we've made progress, there has been a lot of breakdown in trust because of either just not having access to financial services and products or just outright predatory practices. How does Unity Bank help to revive that trust, like bring more people into the modern banking system, knowing that they have an advocate?
I think the first thing is, number one, we really stick to personalization. We are a small community bank. We are an MDI, Minority Depository Institution. And just a little history about that, like she stated before, at one point in time, you had roughly over 180 African-American banks across the country. Today, we're roughly between 16 and 18. Did y'all hear me? 16 and 18 African-American owned institutions across the country. Not good, because when you have, compared to our other counterparts, other communities like Hispanic, Asian, they're growing vastly. And the number one reason why is because the community believes in supporting their own. And that's what we break down. And so back to what you're stating, we stay true to our mission. That has never gone away over 62 years ago. The same thing that we did when our founding fathers found us, we're still practicing the same. Regulation has changed. We are regulated just like any other institution. Matter of fact, we're regulated like the Big Four. That's our examiner. Matter of fact, I'm wrapping up an examination as we speak. So they measure us just like a JP Morgan, a Bank of America, a Wells Fargo. When we're a small community bank, roughly 250 million compared to trillions, over 100 billion, because that's considered a big bank. But at the end of the day, it's about personalization. And if we lose that, we lose our identity. But I think it also starts with the community and the mindset and the shift. When Freedmanstown was around, what were they doing in Freedmanstown? They were building their own community. They had their own hospitals. They had their own banks. They built their homes, everything. It was in that community. The money was circulating in that community. And today is the same thing. If you have only one African-American owned bank in the state of Texas, that's a problem. We need more. It shouldn't be just a Unity National Bank, but it starts with us and it starts with our community and making sure that the 1.8 million trillion that we're spending, we're making sure it circulates back in. And so the more deposits, which is a liability for any institution, the more deposits we have, the more money we can lend out. The less deposits we have, the less money we can lend out. So when people walk into, especially a Unity, oh, y'all don't lend money. That's not the case. Where's your deposit at? The Big Four, because it's convenience. And so I think we have to really look at, how do we continue to build our community? It starts with us. And that's what Unity is here for, to support that, support community. That's what we do. We do community lending. We're local. Our decision-making is local. Everything that we do is local.
Sherry. Now, I just wanted to hear a little bit more from Jill with the Institute for Entrepreneurial Leadership. If you can tell us a little bit about your organization, and you also have a lot of background in just about the different funding models that Black communities have used throughout the decades. Can you tell us a little bit more about your work and how that goes?
Yeah, sure. And sure. So thank you so much again for the invitation to be here. I could talk about this any day, all day, because it is very near and dear to my heart. And so I'll give a couple of bullets just about my background to help everyone understand how I got here. And I don't know that I'm so knowledgeable about all of these different models, but I've had a lot of experience, not only with what works, but with a lot of what does not work and what has not worked. So the Institute for Entrepreneurial Leadership is a nonprofit 501c3 organization that my father and I started together in 2002. So I have been doing this work in this space for a very long time. And we started the organization because my parents had a newspaper publishing business for about 20 years, City News. One of the publications that they had was the Minority Business Journal. So as a high school student and college student, I was helping my father to do workshops about access to capital for Black-owned businesses. So that is almost like part of my DNA, just that story, and hearing and seeing their journey and working in their business during many of my formative years, seeing the challenges they had getting access to capital and some of their peer companies or peer entrepreneurs who had been in business for a much longer period of time and who had multi-million-dollar businesses who could not get access to capital, or were using their home as collateral, despite the fact they had been in business for, 15 years or so. So seeing that. I went to Harvard, undergraduate degree in economics. So I learned kind of the world version of economics as some people see it. I struggled with some of the professors because some of the things that they were saying I just felt were not true, especially the part about us being rational actors, and that always bringing us to an equilibrium. I don't think all of us are rational actors, and we're seeing a little bit of that today. I then went to Goldman Sachs in the financial analyst program in mergers and acquisitions, and I saw a whole nother world of what happens when people have access to capital and significant amounts of capital, and the wealth that is generated from selling a business. That was something that my parents never talked about. They talked about legacy being the business itself versus the wealth that the business could create. I worked for them after Goldman Sachs, went back to work, and then I left to write business plans for .coms that were raising money. When my parents decided after 20 years that they wanted to move on, they had not built the business in a way that they could sell it and, extract all the value that they had created in this amazing brand over 20 years, and they shut it down. And I always felt that was wealth that was lost, even if they had sold the business for, 100,000, 200,000, that's still more than zero. Right. And something that you then use, that is the legacy that other generations use to go and build other ventures, acquire assets, things like this. And so the idea of the Institute for Entrepreneurial Leadership was really initially to help businesses, and especially Black-owned businesses, to learn the things that my father felt that they didn't know when they started. That was all great work. We're really proud of that work over many, many years. But I'll fast forward to 2018 when I had this aha moment where it really was like something hit me on the head and said, oh my gosh, the problem is not the businesses. There are a lot more training programs today than there were in 2002 when we started Eiffel. The problem is not the businesses getting more training. Training is always good. You can always learn something. This problem is systemic in nature, and it is due to the fact that we do not have the proximity and relationship to folks with access to capital. So that's why I'm excited to have this
Yeah.
conversation.
And I'm sure you can see a lot of the parallels when we talk about just even from this first panel about even getting into tech. Oftentimes with, certain programs that are designed around inclusion that are not designed by us, it's focused on training us more. And it's like, we've done all the reading. We read all the books. We've gone to all the classes. That's not it. It's actually getting a foot in the door and someone that wants to let you in. So I'm glad we have people like this that are actively working towards that. What comes to mind, and it occurred to me as I was getting ready for this, when I grew up, one of my first jobs was actually at a small community bank in DC. And Sherry, when you were sharing that, we only have 16 to 18 now, this community bank is closed. And I'm like, oh my gosh, that's one that is gone. How do we get back to that? But, and outside of us having access to formal capital institutions like what you experienced at Goldman Sachs and other institutions, any of you, have you had any experience with unique funding models that Black communities have used, when we had to self-fund? I don't know, Philip, you deal a lot in this space yourself. I kind of grew up in a neighborhood that a lot of Caribbean and Latin communities, and we would have I had some friends, parents would do like susus, like these lending circles, things like that. If anyone has shared your kind of experience or knowledge about alternative funding models that we've had to rely on in the past, or maybe still do.
I'll jump in there because one, phenomenal ladies. If I could give them a round of applause, there's nothing better than being a man sitting next to powerful, smart women. In fact, that's how you get ahead. No, but for those who don't know me, I'm Philip Yates. I'm a lawyer by trade. I do corporate law, bankruptcy. And so I've seen a lot of this in different spaces. But through corporate law, I've had the privilege of sitting on a team that has went public. And so you get to see it, all the work that goes into that. And just recently, I have a company out of Austin that I've represented the founder since the very beginning. And he just acquired a company. So now his assets have increased in value. But before then, I was fortunate to cut my teeth on a lot of the work I do in the community at a place called Houston Area Urban League. It's an affiliate of a larger nonprofit, National Urban League. And I was a young lad at that time, less bags and maybe a little bit skinnier and faster. But at that time, I was able to kind of just play in a sandbox because they trusted me. I'd already had my MBA. I had already started a franchise and been in corporate America. And so through that experience, created a platform with Judson Robinson III and Eric Goody, who was the leaders of the Urban League. And we saw a lot of entrepreneurs. I'm talking about thousands. At this point, I said 15,000, but that was probably 5 years ago. And I still work in some capacity there as a consultant. But the reason I bring that up is because when people are going through their journey, no matter where they're at, the process doesn't change. You see people whose ideas die at the grave, jail cell, divorce, full-time employees. There's all the, because of kids, and I love my kids, but sometimes they drive me crazy as well. And so you talk about alternative capital. I'm not sure if it's an alternative as it is that people who traditionally have not been through the process don't know how to get to the capital that Sheree has in her bank, right? She can't just hand out money for free just because it's a majority Black shareholder-owned bank. And because she's a community bank, she still has the same responsibilities that Wells Fargo, JP Morgan Chase, PNC, and Bank of America has. And sometimes we forget about that when we're going through the process. So you do kind of have to hack the system. I know when you talked about Freedmen's Bank, I love that story. Equal Liberty, which is the company I started as a response to some of the trauma I went through. I'm sorry, it's not trauma, I'm joking. But the data that you find when people don't succeed because of capital, Equal Liberty was born out of that. And so one of the things we did, we created a 1865 pitch competition. And it was basically a salute to Freedmen's Bank because at that time, as you stated, you had all these community members coming together to bring their capital, but for de facto racist laws. We're not going to just say Congress. Let's call it what it is. It was racism that basically went in there and hedged a bet against their assets, knowing that they would lose it, and then they blamed it on the shareholder, which I think at that time was who's the leader? I think that's when Frederick Douglass at that point.
Yeah, one of the last presidents was Frederick Douglass.
Yeah, but they
came in, years later,
intentionally
to try to revive it because they had taken on these deposits, and so Black peoples. These were, soldiers from the Civil War, formerly newly emancipated people, that had been saving up their money. And they really committed to banking and having a secure place to store their money and also lend it out. And really the story that happened is just the trustees who were not part of the community mismanaged those deposits.
Yes.
And,
he was the fall guy.
we see what's happening in the East Wing right now. So
and that's what
it could have gone to a ballroom. I don't know.
So getting back on track, the reason you talk about alternative funding, as entrepreneurs, as founders, and I know there was a tech panel prior to that, there has to be a process when you're building an asset. So you have to have a proof of concept, and that has to be funded. Either you got to put some skin in the game and fund it, or you got to have a community of people that say, hey, we believe in your ideas and we're going to help you get to that next milestone. A milestone doesn't mean you're at the light at the end of the tunnel. And I think a lot of times as entrepreneurs, we forget the fact that we don't even know what the light at the end of the tunnel even looks like. So going back to the question, alternative funding, you have to know what the capital stack looks like. You have to know how you're going to stack options to get capital to meet the next milestone. And if you've never been through that process, to your point, Jill, it's kind of hard to kind of understand. It's like, growing up, and I grew up in A-Leaf. Anybody here from A-Leaf? I always like to do a shout out. See what I'm talking about? That's what I'm talking about, baby. We get unprofessional real quick, and I apologize about it. Sharon, don't judge me back there. Don't judge me. I told you, the collar shirt, I still got the J's. But no, it made me lose my train of thought. See what y'all do to me, A-Leaf? I was trying to get to the point about the proof of concept and finding people, because as you're going through that journey, from A-Leaf, I was saying that we saw hip hop stars, we saw sports, and then you saw the street people, and then you saw people who were just trying to get ahead. Well, I didn't see very many lawyers until my dad remarried my stepmom, who was a judge, and then I said, hey, I can be a lawyer one day. But by that time, I'm like 16, so I got lucky, and I had a great dad who was in banking as well, who was for many years did the same thing that this great woman's doing, making sure that people have access to bankers and have resources. And so I kind of took that on. But going back to the story of alternative capital, you have to learn the process of how capital works. And so sometimes it's the first step. How do I have pre-venture money in the idea stage? Where I'm going to get that from? Well, pitch competitions. So that's why, we need our bankers and our community leaders. If you're going to put on activations, you got to find a way to get people to get early stage capital to take that first step. Well, the next step is once you have a proof of concept, now you got to figure out who's going to help me make sure I get my first customer. This is all alternative capital, because you can't go to a bank without a proof of concept, having sold a product or service or shown that you're operationally efficient to actually get funding. So that means we as a community, yes, give to your churches, give to your nonprofits, but also support the person next to you. You can go to a club, you can go to a food place, you can go to all these places socially to spend your money, but you don't put money into a person that you spend time with, that put their ideas and their passion on the line and their lives on the line. You won't invest there. Why not come up with a plan where you to put your money there? So crowdfunding. Then after that, you got to get to know some people, right? Because at some point, you got to find out where the angel investors are. So you're at the TUS House now. Yesterday, they had a successful event at the Ion where there was people from the VC world, angel capital world, pre-venture. Just investors that help you get to commercial funding. You need to know them now. And hopefully I'm talking to camera when they show somebody, because all of us look like we're pretty successful. But to the point is, you got to know those people so that you're preparing. So when you get there, you've already checked off all the metrics. So by the time you get to Cherie, it's not alternative funding, it's that you understand what the funding cycle looks like. You understand what the capital stack looks like. And now you can present her to something where she can take it to her underwriters, get you the loan you need, and now you're creating jobs, and then you got to figure out how you're going to expand, and then eventually exit so that you can go into retirement. So alternative funding is more about knowledge, awareness, and also really understanding the process than let's create something new. It's been there since the beginning of time, since Freedmen's time, in the biblical time. That's all it was. You didn't know they were giving capital until certain Eastern communities decided to put a metrics behind it, but also all the products, service, currency. We're doing the same thing, but we have to become aware. But because of the history of African Americans and other minorities, you haven't participated in the process. And we're kind of confusing it when it's no, let's get back to the basics, the fundamentals, and let's leverage each other to build wealth.
And
Thank you.
If I can add to that, there is definitely a cultural overlay to this as well. I don't know about you all, but, I grew up, you didn't talk about money. We did not talk about money, having it, not having it, or sometimes I just heard kind of we don't have any money right now. I never knew really what that meant. we have heard from some of our entrepreneurs, I don't know how to ask for money. I was always taught asking for money is a sign of weakness. And you especially even don't talk about what you have, because then there were people in the community or probably in your family who are then trying to get money from you, right? That's the perception. So the perception is just stay quiet about money. Well, the reality is as a business owner, whether it's a small local business or it is a tech startup, your number one job is to secure funding and resources for your company. So you have to be out there asking people for money, talking about what you have. And then on the flip side, and over the last several years, we have gone very deep into the angel investing space and trying to create greater awareness in the Black community about angel investing. You talk about alternative and you mentioned angel investors and regular people. The thing is, that's not even alternative. In resource-rich communities, this is just what they do. Yeah. You're starting a company. Okay, how much do you need? Okay, great. Let me host a dinner party for you. Have a few folks write some checks, and boom, you have your startup capital. There's no need to prepare for pitch competitions, all these things.
Yeah, because they're bankrolled early on. And I've seen this firsthand working with other communities, is that, you kind of get to talking with certain business leaders and they're so proud to talk about like who they bankrolled, and they're kind of start listing names of
who they funded.
Yeah.
And it's even a thing. There was an investor I was talking to recently, and I asked her if she had seen a report about a particular company. She said, no, I haven't seen anything from them since they shut me out of their deal. And that's the perception of people that are in that investor world, and even angel investors, is they're trying to get into deals. They're looking for opportunities.
Yeah. Yeah. So, with your work with Eiffel, number one, you're based in New Jersey, but you do work all over the country. Can you talk a little bit more about how, because we know businesses of all kinds, whether in tech or traditional business, need funding. What is the need from the investor trying to get in? Because I actually have a few that have said, I want to invest in something. And I'm like, that's not a strategy. What's the plan? Where do you want to invest? What kind of returns are you looking for? How do you help them even get connected with businesses that are looking for that funding?
Yeah, and it's really through your network. A lot of it is through networking, which is why relationships matter, which is why, as you just said, you got to be out there networking and putting yourself in the places where the people are who have the money and the resources. And so with Eiffel, we have 3 programs as part of our investor inclusion program focus area. The Making of Black Angels, which is awareness building, and we have a free course on our website. We now have the Making of Latin Angels for the Hispanic community. And then we also, in 2023, acquired Pipeline Angels, which is a 12-week experiential training program that focuses on women and non-binary folks who are interested in learning about angel investing through a lens of inclusion. And really the beautiful thing about angels is they decide. As an individual, you decide. They're not regulated the way the banks are. If I just want to say, write a check just because, I can write a check without doing any due diligence. We don't advise that. We advise people to, do their due diligence. But at the same time, if we have a relationship and I've seen you grow up, I've watched what you've done. We always hear people invest in people. Yeah. It's that people invest in people who they know, like, and trust. So as an angel investor, really the biggest thing is developing that relationship and understanding if it's a fit for their interests.
Fantastic. Well, back to you, Sherry. Sherry, by the time a business owner gets to you, they may not, particularly if they're maybe not even a new business owner, maybe they just haven't had that many funding opportunities. How do you help them through education, understanding their credit, all the traditional metrics needed to know what type of funding they should be going after? Do they need to go after personal loans or commercial loans? Or do you send them back out here? You need to go to one of Philip's pitch competitions. How does that work?
Philip doesn't have any pitch competitions for the record.
Obviously, I'm trying to get him to make one.
So I'm gonna come back to your question. There are 3 steps when it comes down to getting funding. And I say 3 simple steps, but when I give you that checklist, you're going to look at it and have anxiety and stress and all of the, wonderful things. 3 steps. First step is you reach out to your banker, which hopefully all of you have a banker now, right? No? Hands? Yes. Okay. So reach out to your banker, schedule an appointment, let them know what your idea is or what you're trying to do, whether it's scale your business, whatever the case may be. Number 2, once you've done that and that banker feels that you are ready, you're going to get that checklist so you can start gathering all your information. That's step 2. Gather all your information, send it to your banker so your banker can review it and send it to the underwriter. Then they do the underwriting. You know at that point, yes, it's a good deal. No, it's not a good deal. You need to work on X, Y, and Z. Third, if you get approved, third final step is closing and funding. Those are 3 simple steps, right? However, before you get to that step, I think it goes back to what everyone has already stated, right? Being prepared, research. AI right now, to me, is no reason why you shouldn't know what you need before you walk into a bank or before you go into an investor, angel investor. Research, networking, and making sure that you have a mentor and someone that's around you that has either done it or is doing it. That is the key. And so a lot of times when people call me, they say, okay, I have this idea. Amazing. I love it. What's the idea? This. Okay. So where are you in that process? Well, it's just in my head. That's not going to work for a bank. You need a business plan. There are so many free workshops, SCORE, SBDC.
The US space.
The UpSpace.
We have the template.
Yes.
A template. We have a platform on our website. Right now, you can go on our website, unitynationalbank.com. It's called Our Money Matters. On Thursday, I'm just throwing this out there. No, I'm sorry, Friday, the Greater Houston Black Chamber is having a wealth forum at Rice University. I'll be doing a discussion about Our Money Matters and why it matters for the future. Those are some of the things that you have to start off with. SCORE, SBDC, maybe Phillip, the Urban League. They will help you do a business plan at no cost. They will help you do market research, no cost. They will help you do projections. That's what I need when you come in. Now, if you're already in the middle of your business, a lot of times people don't have a CPA, a bookkeeper, an attorney to read over your contracts to make sure that everything is okay and you're protected. These are things that you need, and it is a cost. Whatever you do is a cost. If it wasn't a cost and it was easy, everybody would be doing it. But those are some of the simplest things that you could do, and make sure that you have your documentation ready. A lot of times I see people that have been in business for 30 years. What's today's date? October the 28th. If you filed an extension on your taxes, which was October the 15th, and you still don't have your tax returns, shame on you. You should automatically, when you have a banker, you're in a business, automatically make sure your CPA and your banker are connected. Make sure your banker is connected with your attorney. Make sure your banker is connected with your advisor. We are your team. And I'm not a cost to you at all, unless you have a loan and you're paying interest. But I'm no cost to you. I'm free. I'm a free resource. Not only that, at the end of the day, I have a portfolio. So I have hospitality. I have tech companies. I have people that work salons. I have all industries. So at the end of the day, if you come to me and you're saying, I want to start this or I want to expand, I already have a portfolio so I can help you to say, this is what you need to do to grow your business.
Fantastic. So, let's just kind of move this back to tech and like how we are moving a little bit differently in this 2025. How can technology right now help us build a more stable capital stack? The different types of funding we need, because we all know, a lot of us have learned through trial and error that like not all money is worth the same. Some money costs more than others. How does tech and other developments help us have a better understanding of where you should get funding from, whether it's an angel investor, whether it's a long-term bank loan, or whether it's short-term, intermittent funding?
Yeah, I'll jump in there. as I transition as a corporate attorney, one of the things I've done is start a tech company. And that's what Equilibrity is, just for the background of my space. Equilibrity is a fintech. Got it from a concept called binary economics. There's a gentleman by the name of Louis Kelso. He's an attorney, economist, passed away, but he started the ESOP, was the employee share ownership plan. And through that concept, it was the idea that, okay, if you give employees more responsibility, more ownership, then they'll be more productive. And through binary economics, I said, let's take that same concept for community. Because a lot of times when we talk about communities, when we're looking at some subcategories or federally protected categories, we're really just talking about somebody feeling valued and feel like they have equitable experience in the American economy. And that's meaning sometimes they need more ownership. And so with binary economics, it's an equilibrium that we talked about earlier of a balance of producers and consumers. Fast forward and going back to the tech space. So we said tech space. We said, let's start a tech company that can accelerate this, because a lot of the work that we're talking about has been going on for years. I mean, Unibank's been doing this since 1963. UrbanLink's been doing this since 1901. And that keep going on for all these different legacy organizations. And so at some point, we got to hack the system and we got to go fast, because there's something called the black tax, where no matter how much work each of us put into our efforts and our wealth building, eventually we're going to die. And what we don't want is somebody to come up behind us and start the race from the very beginning, because that story's getting old. At least I hope, can we all agree that story's getting old? Mm-hmm. And so we started company tech. I had some issues the first couple of years. And then more recently, after having just partnerships with certain banks and community partners like you see up here, we were able to get Amazon to actually embrace us. So they're using machine learning and AI through a predictive model, and Predictive is coming in and building it out and working with Plaid, which obviously anybody who's with financial. So we're using technology to basically help hack the mind to understand what the capital stack is. Because a lot of it's all psychological, right? One, how you manage money, how you manage debt, how do you understand what to do once you get more money, what to put that money, so that the people who are responsible for the underwriting process can trust you. So we have our own underwriting process built in there for you to be able to access more borrowers, also so you can eventually become a lender, but going into undercapitalized communities. So that's why I'm doing it through Equilibrity, through the tech side. However, let's say, Equilibrity is not present because we haven't commercialized it. OpenAI is out there now, so that us as founders and entrepreneurs and leaders in our respective institutions and organizations, we almost have a duty to be a good steward to do our research. Like, you no longer can say, I don't know. I love what Sheree said, not only do you leverage AI to find out what the capital stack means, how much money should I be asking for based on where I'm at in my business journey? It's that simple. After that, it'll learn who you are and it will start giving you the answers. Now, what I don't want you to do, and I advise you as an entrepreneur and an attorney, don't use that as the truth, because what Sheree said, you need a mentor. If you haven't found somebody who's successfully done it, then you're not ready to talk to somebody who can bless you or give you the opportunity you need. You really need to sit down and talk with somebody. That's why your banker is so crucial, because I love the way you put it, Sheree. It's like, it's not the fact that she's trying to give you a loan. It's like she's been through the iteration. Like, I have a portfolio. I know when there's a successful business in the hospitality space. I also know when there's a business that's not as successful. I can talk to you because you doing good business makes me more money. I gave my example about the client I have that recently acquired, because it's in my best interest for him to acquire that company. Well, now I know what it takes to come to get a company acquired, and you want to talk to a lawyer who's been through that. I mean, there's a lot of better lawyers than me in the city of Houston, obviously, because I'm probably working on Equilibrity and stuff. But there's not a lot of Black lawyers that have been through an IPO, an acquisition, and helped so many businesses that I have. They just don't have that. So you can chat GPT all you want, but you'll never have that institutional knowledge that I have. And that goes for everybody up here, anybody who's an advisor or a mentor. So I say that tech, rely on it. It's here. You almost seem like a lazy buffoon. Is that all right? Is that, can I use that word?
I mean, look, we're all tech enabled at this point, so let's use it to its full ability.
So yes, use it, because I'm telling you, look down upon if you say something and you haven't done your due diligence and your research. But more importantly, it's what Sheree said, please find advisors at the TUS House. Go to Freedmanstown. Go to UrbanLink. Go to Baker Ripley. Go to Shure. Go to SBA. Go to SCORE. Go to the Ion. Go to Impact Up Hughes. I can keep going. All these places have made it affordable for you to get the resource you need. So whether you're listening out there because it's going to be played online, or you're in this room, and none of us are billionaires, so we're all continually learning. That's the last piece I'll land. No matter where you're at, one of the greatest stories I like telling when I'm talking about capital is that there's a gentleman that I respect and adore because he's so successful in this city, and we all look to him for advice. But we were at some important meeting, and spare the details. He was talking about how to acquire an asset, and he didn't know he could leverage his current assets that he had to do so. Here's somebody teaching us about economics and wealth building, And he didn't know that that's a part of the process. That just lets me know we all have to be ongoing, continual learners. So you never know what you may learn. So even if the people in this room, people listening out there, find a mentor or advisor who's done it so that person, like you don't be that person who missed out on acquiring a building at a very, very low cost. Like this building, I'll leave here because I can talk all day about this stuff, but this building was acquired at pennies on a dollar just less than a year ago. We probably all collectively in this room could have used our relationships to pull together our capital, started a special purpose vehicle, went to Cherie, got the loan, got it out. I don't know if it was in bankruptcy or it was just distressed. But
Have you been on our conference calls? Now you know.
no, this is what I do. But that's it. So my point is, use technology, but use your resources.
If I could just make one caveat on the technology, though, is make sure you're not using public platforms that are training the LLMs and, use the paid versions of these tools so that your information is staying private.
Yeah, it's worth the investment. I just actually did want to give a last question back to Jill before we open up the floor for audience questions. Can you kind of break down, I guess, the difference between debt funding and equity-based funding?
Yeah, and what's funny is Cherie and I have done sessions together on this very topic. Very simply, equity is when you are selling ownership in your company. There are many people who are today focused on venture capital and getting venture capital. A lot of the message that we talk about is that venture is very expensive and it is not for everyone. And if you're having difficulty getting funding from VCs, that is not an indictment on your company or you. It may just not be the right type of capital for your company. Debt is where you are getting a loan. You're not selling a part of the ownership in your company. Debt generally requires, it always requires it from a banker's perspective, that you have a way to pay that back. Equity, you're not paying anything back. Owners are, or the investors rather, are expecting some sort of a return. So either you're buying that equity back or you're selling the company and having some sort of an equity event, liquidity event.
Okay, thank you for that. So we have a few minutes left. If anyone has some questions from the audience that you would like to ask any of these experts here, now's the time. Okay, go right ahead.
I have a question, and this may be more related to I think the advancements in fintech that we're seeing. How do you think us as a community can benefit from the chain, right, blockchain, and the movements towards alternative currencies? Because we're talking about physical dollars now, but we even see NFL stars, sometimes actors and celebrities taking their paychecks in other forms of currencies. And that's also a source of capital. I think that's something that we should explore. Is that viable? What is your opinion on blockchain and those alternative currencies?
You got Al right there. Football player. And he's having an event on Thursday where there'll be some NFL players that you can actually talk to and maybe network with and get investments from. But I'll speak to the general question because I know you started going down in terms of like how people accept their payments and maybe they're doing that so it protect the shielded from liability, especially if you talk about the lifestyles that some of actors and athletes go through. But in terms of fintech, I think it's helpful, right? If you think about the blockchain, it's removing the bias that comes along with the underwriting process and capital. There was a gentleman that I spoke to about Equal Liberty. He owns a coffee shop in the Third Ward, very popular coffee shop. And so he's not even African-American, but he started many, many years ago. He came out of University of Houston, smart as a whistle, corporate America, made all the money. And then he decided, hey, I don't want to do this anymore. He came back, he started his coffee shop, he started looking for capital. Well, when he was going to the banks, all the banks were using outdated data regarding Third Ward. And they were saying, hey, this isn't a good way to get loans. And so it wasn't until he got to know a banker and build a personal relationship. And they said, wait, why are people telling you no? That person kind of broke down the barriers that he needed to get to. He got his capital. And now he's still open to this day. And I don't know how many years he's been in, like at least 15 years, right? I tell that story to say that what blockchain is doing is taking the face It's taken with the notion that Black people are lazy. It's taking the notion that women can't be entrepreneurs. It's taking the notion that because you're in this community and you haven't been exposed or has been undercapitalized based on geographical data, that you may not be able to return the investment, whether it's a loan or it's equity investment. So what fintech's doing is taking the bias out and it's allowing more capital to be decentralized. I mean, that's the word, right? But I'm trying to give it in real terms, like you're decentralizing. So now it gives more people access to the capital they need. And that's what I mean. Banks are going to go there. You can see the slow trickle. So everything that the current president is doing, no matter where you're at in the political spectrum, there's something he's doing. He's setting it up so that more people can build wealth. It's just important to have these conversations so that as they decentralize the capital, you're not still thinking with the outdated methodology on how to get capital. And you're already positioning yourself, whether you're working with an athlete who's putting his money in Bitcoin, or you're already operating on some kind of network based on how blockchain is, or you're just learning. And that way, when it's time, you can strike while the iron is hot. But great question.
So yes, we all need to be learning.
I also like to add to that as you're looking at some of those blockchain financing models, definitely look into emerging markets as well. I mean, so much of the Black fintech space is really growing in Africa and South America as they were trying to, deal with their own currency hurdles of having highly unstable, like traditional currency models. You have, startups like M-Pesa, Kuda Money that have really built like entire currency networks for business and personal use just from using cell phones. I think a lot of that mindset we can absolutely use here, just by talking to our diaspora cousins and learning. Any other questions?
Are some of the resources that you shared, SCORE, SB, all of those, are they already putting out resources, classes, self-paced around blockchain and that type of technology? Have any of you guys seen that?
I have not, but I know it's conversations that's going on. And you have to keep in mind, most of these organizations are ran by the government. So government is totally against it. However, what I want to add is when it comes down to the fintech, the blockchain, they still have to be tied back to a bank right now. Even though they're trying to decentralize it and everything and break it down, it's going to take years, just kind of like energy, right? Solar and all of that. It's going to take years before we get to that point. It may be, they may speed it up a little more, but at the end of the day, every time you go to a fintech, and if you just look at it and you go to the very bottom, it's going to tell you what bank it's tied to. So I don't know if you all know about Greenwood. That's fintech. So Greenwood is tied to a bank in California. Any Plaid, anything that you can think of, it has to be tied back to a bank at the end of the day. It is, but it's your pros and cons, right? Right. So you have 250,000, you have $1 million, right? And you spread it out. Should anything happen, a bank collapse, like we all knew about the banks that collapsed and everything, your money is secured. When you're talking about Bitcoin and all, and I'm not against it, right? But when you start talking about all these different fintechs and things of that sort, it's not insured. So if you put your money somewhere, it's gone. I mean, the same thing with Zelle. That's fintech, right? Banks use it. That's probably your most secure right now is Zelle. And that's currency that's just moving. No one's touching it, right? It's not tangible, but you're just moving it. You got to make sure you have those type of funds in your account. However,
that goes through the automated clearinghouse.
Correct.
That
right.
allows, yeah.
But it's the same thing, right? You're just moving money. It's money that you have to have, and you're moving it, right? To whoever you want to move it to a business. However, it goes back to U.S. Treasury. U.S. Treasury is not going to give a fintech money. They're just not, right? So at the end of the day, who's trusted? Your banks. That's who's insured. These other companies don't have that type of insurance. And so again, this administration and some others are trying to break that. But how far can you get when it comes down to, okay, we're going to decentralize that, we're going to break it down, but at the end of the day, we're going to have trillions of money just kind of moving around, but it's not insured.
Just piggybacking off that, because everything she said is right. And I think it's important for us to have these conversations in our community because it is about the trust. Like FDIC is not there just because of like a stamp. It's because is regulated. You want regulation.
It came after 1939. After
you were like a really history buff.
Yeah,
I know.
I read a lot of books to get ready for this session.
I want to give you a real time example that we want to make sure that our money is protected, right? Especially our community, because we've all heard that when the rest of America gets a cold, we get pneumonia. And so I had a case, Privy Investment, you can look it up. And so all these people are putting their money into a cryptocurrency, and you can get a return, and it's going to be not, regular market's 5x. I can give you 10x. I'm giving it to you in 10 days. And I looked, I said, no, there's no way this is right. Like to Jill's point, you can't just go give money to people in investment. Like there's blue sky laws, there's accredited, there's unaccredited. Like there's systems in place to protect the people who can't afford that risk. And so all these people put in millions of dollars. And then eventually it came tumbling down. He took like $9 million from some other dollars. Well, they sued him because they had big time lawyers. And this guy, he fooled everybody. Next thing you know, I'm in a meeting with the FBI, the SEC. They filed bankruptcy. I said, that was dumb. Don't do that. Because now you're on the radar. You could have paid these people back. But because he was violating SEC laws, FBI will come and get him, and eventually they might get some of their money back, but it's spent. It wasn't regulated. There was no bank to say they was backing them. It wasn't SEC regulated. Most people don't even understand what the SEC laws are about when you're taking venture money or money that is not going through a formal process. So in our community, it's really, really behooving it's important for us to talk about investments, how it works, understanding, continually learning, because we put our money in things we can't afford to lose it, because that may be our house, that may be our savings, that may be our children's school. It could be pretty much devastation where now you got to start all over in life, and that goes back to that black text, all because of lack of learning. So great question, brother. Thank you for that.
But there are two sides to that. The regulation is there to protect us, but at the same time, it is that capital that is not regulated from individuals who can choose to invest however they want to invest. But when they invest, it is with the understanding that that money might be gone, and that investment might be lost. So understanding the risks. However, we need capital on both sides of that equation to get capital to folks like all of you all with your companies.
Well, thank you so much. I really wanted to close up today. Jill, if you each can just share how we can stay in touch with you, stay in touch with your organization, and maybe something interesting you want us to know about coming from your org and, next year. Yeah. I know you have a lot of great things coming up with Eiffel.
So I'll be real quick. LinkedIn, I'm a LinkedIn junkie for sure. So definitely connect, and happy to share my information with anyone after. We are very, very excited that we're launching an initiative called Capital Circles, which is focused on in 5 markets. Houston is one. Where we focus on bringing folks together, like these amazing folks and others, and angel investors and people who have the financial capacity to be angel investors, to really come together and collaboratively figure out, how do we get amazing small business owners, entrepreneurs, and founders here locally funded, so that we're breaking down the barriers, we're leveraging our relationships, and actually moving capital. But, there are fewer resources across the board. Things are tougher. So we have to work together to make those resources go a lot farther.
Fantastic. Thank you, Jill Johnson with Institute for Entrepreneurial Leadership. So definitely connect with her on LinkedIn. Philip.
I'm connecting with Jill. Look forward to collaborating. Philip Yates, you can find me online, Instagram. I'm on Instagram. So you get to see like the whole part. So the kids, wife, and all the crazy things I do with my fraternity brother. So PJY_Equilibrity, and then just Philip Yates with 2 L's on LinkedIn. Coming up after we're all done with this week, we have Black Entrepreneurs Week. This will be our 5-year anniversary. That deserves a round of applause. We've given out. We talk about some of that early seed capital. It's been over $100,000 that we've been able to award over the years, and we have more and more banking partners coming up. That'll be November 29th. Through December 6th, 16 events, 8 days, and it's really about meeting the community where they're at.
I'm actually going to be back for that.
Chill, what? I just put you on a panel on my mind. I want you to know that just happened. But honestly, it's something for everybody. You're not rushing me back there. I came down here from downtown. I'm joking. That's all I have. BlackEntrepreneursWeek.com or BWHouston.com. You can find me at philipyates@gmail. And obviously, like I said, I still do Law of Love. That's my passion. That's what keeps Harper and Philip fed. And if you want to make a donation to Harper and Philip, you can Thank you guys for the time.
All right, thank you. And Cherie.
You can find me on LinkedIn, first name SHERIFAT, Lawal Price. And then also Instagram, Mrs. MRS _Price13 on Instagram. Like Philip, you could probably find everything on there, everything that I do. And then also Unity National Bank, so www.unitybanktexas.com. And then please go and look at our Money Matters digital platform. But those are the best ways to get in contact with me.
All right. Thank you all so much. And I'm Cassandra Iku. You can find me on LinkedIn. I'm usually milling about Houston and all these smart communities like this. That's where I love to learn and get to know more people. But thank you all so much for today.